As always, wonderful and beautiful, glorious day it is. Ladies and gentlemen, this is the day the Lord has made. Let us all rejoice and be glad in it. Absolutely, yes, it is. It is a super Saturday. Super Saturday it is, as my great auntie would say, and Jeanette, God rest her soul. It is September 14th, 2024, and this is your weekly trade watch list. Absolutely. So y'all know I'm about to go with gold. You know, gold is my favorite pair, but every pair prints the candlesticks print the same. It doesn't matter if it's a forex major, forex minor, indice, um, metal. They all print the same. All right. So, for instance, I'm gonna end up. We're gonna go over this, and I'm gonna end up marking this all the way back up again so you all be able to understand it. Because what I like to do is wipe my charts clean and be able to show you all from scratch how to mark up the charts instead of just throwing manual stuff over here and then going over it. I want you to actually see me do it. All right. So, but only behold, going over this, this was a trade that we took that was thrown into the Telegram group, the free Telegram group, the Signals group. This was a trade that we took. Simply executed sales right here. Stop loss 160 pips from the entry. And our TP, we were going for 1,465 pips from the entry. But, you know, the market had other things. So the thing about it is I do have a take partial system. So when the price broke this low right here, it caused a break of structure, it caused a bearish break of structure. We simply closed 50% partials, put our stop loss at break even, and we were going to let the rest of the remaining volume ride to the overall exit. Obviously, price diverged, it changed character right here, and it rallied on up, and it did what it did, right? So the reason being, I have a color coordinated system. When you see yellow, it's on my M1 time frame, meaning the M1 1 minute time frame. Each of these candlesticks took 60 seconds to complete and print. Once 60 seconds was up, boom, it done cooking. Boom, another candlestick came out. Took 60 seconds to complete this. Took 60 seconds to complete this. All these particular candles we're looking at on a 1 minute time frame. So we simply took this trade based off the M1, and I can explain to you as to why we took the trade. So um, right here, the market diverged. Like these two wicks, the wick right here and this wick is slamming lower. On the RSI, is doing this. It's slamming upward on the RSI in that area. You see it? I already have it marked out. See how this is slamming lower? Let me remove this. I'll show you what I mean by slamming lower. These two wicks right here are slanting lower like this. And in the same exact area on the RSI slanting upward, the midpoint, this is the change of character area. Price change character, then accumulated, reaccumulated, had a bullish break of structure. And then we know after a bullish break of structure, we're going to have a what? A distribution. The market has to sell, but we just don't know where it's going to sell to. Okay? So with that being said, you have this reaccumulation right here, where this is an area of interest where the buyers can do what? Rejoin this market. So the market distributed, redistributed, came into this imbalance. The bulls pushed us back up, accumulated, reaccumulated, broke this structure right here, created a new high. The market distributed, redistributed, came right here, accumulated, reaccumulated, broke this structure, created this high. And then this particular high distributed, redistributed, broke this low, created this new low, and caused a change of character. Okay? So now the market needs to do what? The market said, hey, you want to know what? We caused a bearish change of character. Hey, we want to diverge, change character. Boom, this is the change of character. This liquidity was taken back into what? This imbalance. Supply zone. You see nothing right here is hitting this bullish, the bottom of this bullish wick right here. Nothing is mitigating. Mitigating simply means touching. Nothing is touching this. So what happened was price created this low, change of character, came back up, created this high, came back, diverged, changed character. The reaccumulation that was sitting between here, pushed this back up again, took this buy side liquidity, right? When the market creates a new high, what happened internally in accumulation, reaccumulation, causes the market to push up to create a bullish breaker structure internally. Okay, and so that's what happened. Once the high is cleared, then the market has to sell, has to distribute. So that's the distribution, and we got in for a sell right here with the stop loss right above the high on the M1 time frame, which is super tight, 160 pips on gold. And boom, when the price broke this structure to create a new low, we simply took 50% partials, took 50% off of volume off of our trade, and we was letting the market run all the way to this, all the way to our 9% take profit. But this was an area of interest. This reaccumulation was an area of interest where the buyers had the opportunity to rejoin the market, and so that's why you see this accumulation right here, this divergence. Price is literally slanting lower like this, and it's slanting upward on the RSI. See, slanting upward right here on the RSI. All right, so you have a bullish divergence followed by a change of character right here, and then the market accumulated, reaccumulated. Here is your bullish change of character right here. There's going to be a change of character. So I have templates already saved, so I don't have to do it. 1 minute, change the character above. Cool. And so now the market accumulated, reaccumulated, caused a bullish change of character. The market has to, distribute at some point in time, right? So it came back, took the remaining volume out at break even, obviously. So we didn't lose. We had 2 orders here. We didn't lose on this trade. So the market rallied up. All right, the market continued to rally up. All right, so this was a sell right here. Somewhere in this area was a sell. I called out in the signals chat, and it did not break this low. It did not have my TP1 set at this low, thinking that, okay, cool, this is a lower high. Market's gonna come down here and break this low, create a new low. No, it didn't. So it sniffed our TP1. Didn't take us out, and then took me out for a stop loss. Okay, so but using proper risk management, didn't care because all your trades are not going to go your way. All right, so the market created a bullish breaker structure, which means now it has to create a distribution. It has to create some type of distribution. Okay, so because internally, what leads to a bullish breaker structure, what leads to an upward breaker structure, is internally has to be a what? Accumulation, reaccumulation leads to a bullish breaker structure. So that's why you have right here this distribution. Price slanting upward, and on the RSI is going to be slanting lower. So here it is. Bam. RSI slanting lower. Midpoint right here. This is the change of character area. So the market has changed character on the M1 time frame. Okay. So here's the deal. Just because some people probably think, I used to think this as well. Oh man, I missed my sale. I knew the sale was coming. I missed my sale. No, just prepare for the next time the market is ready to buy. Just prepare for the next buy. You didn't miss the sale. Just prepare for the next buy. That's what you do. So right here, the market passed the market. This was the reaccumulation area. This was an area of interest where the buyers could have came in at. You see how the buyers came in, but this duty of this possible higher low wasn't to do what? Go back up, accumulate, reaccumulate, break the structure, create a new high. That wasn't its purpose. Okay, so this was an area of interest for the buyers. The buyers came in right here, as you can see, off this reaccumulation, pushed back up. Sellers took back over, right? This is a divergence. This is a change of character. Price now has done what? Distributed, change of character, redistributed, broke this low, created a new low. Okay. You probably won't see the divergence on the actual RSI on the M1 time frame in this particular area. Let's see if it shows up. No, you can't see it. So, but this is definitely a distribution, and this is the change of character, and this is the right here is the bearish triangle, which is the redistribution when it comes to the Wyckoff method. Okay, the market price cycles, the market prints, market price cycles. Okay, and now is the distribution, redistribution that led to the what? Breaker structure below. So now this is an area of interest right here. This is a accumulation. This is a divergence, and this is a change of character right here. Okay, now this one is definitely showing on the relative strength index. Okay, so bam, you see it slanting lower in the same exact area, slanting upward, midpoint, bullish change of character. What leads to a bullish change of character? Internally, a lower time frame accumulation, reaccumulation makes that happen. Okay, and so that means right here, this whole deal right here is an area of interest. This reaccumulation, you see how it's imbalanced on that one time frame, is an area of interest where the bulls have the potential opportunity to rejoin this market. Now, here's the deal. This is a great area of interest, and more than likely, the bulls will buy from here. I don't know when, but more than likely the bulls will buy from here. You got to wait for lower time frame confirmation. No putting buy limits, and just assuming that the bulls are going to come from here, because then you can get the stop loss ran. Normally people put their stop loss below the low, get the stop loss ran, and then you become a source of liquidity. But what I see and what I've studied is that, okay, when the market diverged, it changed character right here. It had a bearish change of character right here. Okay, this is a 1 minute change of character below. Okay, it left this open supply zone imbalance. It left that open imbalance. Now here's the deal. It left that open imbalance for a reason. Okay, it left that open imbalance for a reason. It did. Once price changed character, sometimes the market comes back to mitigate the supply zone that caused the change of character, create a lower high right here. Let me show you what the path to. Sometimes once this change of character happens, this low sometimes comes back to hit this supply zone, create a lower high, and then go back down to break this low and then create a new low. But in this aspect, it didn't. That didn't happen. That didn't occur. So what I found out and what I realized from me studying, it left this open supply zone for a reason, because the bears weren't in control in the first place, and this divergence, this bearish divergence and change of character is part of a correction. It's part of a correction. So market diverged, bearish divergence, change of character, bearish change of character. The market continued to do what? Redistribute, push down again. More than likely, the bulls will come in here, show bullish confirmation. You can take you a buy entry, stop loss right below the low. Okay, and then you can look to do what? Go up right here for a possible another bullish breaker structure. So all of that is possible, but you must wait on confirmation. Not sitting there putting a drive, assuming, oh yeah, it's going to buy from here. No. That's how you take a lot of lessons in the market. So, any questions, problems, or concerns? All right, cool. We are continuing. So what I want to do is erase everything that's on gold and erase everything that's on gold and mark up from scratch. All right. Let's go to the monthly. All right. So first of all, what I want to go over is the market price cycles. Just give you something very, very brief. And this is something I also go over in my my Telegram chat channels that are going to be placed in the description below. Trade community, trade signals chat, free at your disposal, free for anyone, any level, beginner, intermediate, advance. Come on here, vibe. Come on here, we take trades together. We win together. We take lessons together. It's a very, very great feeling. Very, very great feeling. You want to become part of the community? Tap down below. Download Telegram on your Google Play Store or App Store. Simply add yourself to the chat channel. All right. So here we go. What we must understand is this, and it's something I went over in my the members of my Telegram chat. We must understand this. We must understand how a market prints. We must understand how a market prints. Okay? So, question is, where can the bulls, I'm going to do bulls first. Where can the bulls appear in the market? Okay, where can the bulls appear in the market? There are three areas where the bulls can appear in the market. Okay, number one is they can appear at an accumulation. Okay, they can appear at an accumulation. Okay, they can appear at a reaccumulation. Okay, and they can appear after the market breaks a lower low, after the market creates a lower low in a downtrend. All right. Those are the three areas where the bulls can appear: in accumulation, reaccumulation, and where the market, when the market creates a lower low in a downtrend. Three areas where you're going to see bulls. All right. Now, you also must know, where can the bears appear in the market? All right. Where can the bears appear? Number one, you got a what? Distribution. Okay. Number two, you have a redistribution. Okay. Number three, you have when the market creates a higher high in an uptrend. Okay. This is true. This is how this market prints. When you understand this, you'll be able to allow yourself to become more disciplined, be able to wait on stuff. You're gonna go from I didn't miss a setup to I'm looking for the next setup. Now that I did not get in on the sell, I can now look for the buys. So it doesn't matter when you understand this and how it prints, where the bulls and where the bears can appear. You're able to allow yourself to be able to ping pong. You'll be able to allow yourself to pro trend trade or counter trend trade for that matter. All right. Once you understand this, okay. Does that make sense? Any questions, problems, or concerns? Anybody want to comment on anything that I just said? If you're simply watching and not a part of the Telegram chat that I personally run, feel free, in the description below on my other YouTube live videos, you'll see 2 Telegram links. It says Trading Community and Trading Signals. All right. Become a member, free of charge. All right. So I'm putting it on Threads and reposting it on Threads and everything like that. So. All right. Cool. So when you understand this, you'll be able to become more disciplined in the market. All right. So now what I want to do is mark up gold from the monthly all the way down. All right. Because we're going to see what type of setup we can get. We're going to also mark up some other pairs. So what I want you to do is, I'm going to do gold because gold is my favorite pair. I do also trade other pairs, but I like gold. I could look at Bitcoin, and give me comment. Put in the comment section below some charts you want to see me mark up, and some pairs that you want to see me mark up. I don't care whether it's an indice. I don't care whether it's a forex major, forex minor, crypto, metal, whatever. Or you want to see it marked up, I can mark it up for you, and it'll be recorded because it's being recorded on my YouTube live. All right. So, boom. Let's get rid of this, and let's go ahead and mark up this chart. All right. So, right here, first of all, right here is a small breaker structure, a bullish breaker structure right here. Right here is a very, very small. All right. This is a monthly breaker structure above, right? So the market did this. The market came back in this area. What causes a bullish breaker structure? Internally, the market had to accumulate, reaccumulate in order to create a bullish breaker structure. Okay, that's what happened. Okay, so and if you don't know what I'm talking about, accumulate, reaccumulate. What I do want to recommend, if you are a book reader, goes to my book readers out there. If you are a book reader, what I do have, if you just want to understand it more in more detail, the detail stuff, but I'll go over as much detail as I possibly can. Uh, what you can do, I have Ruben Villahermosa Chavez, Trading and Investing for Beginners. This is his book number 1. All right, book number 1. Book number 2 is the Wyckoff Methodology in Depth. Trading, how to trade financial markets logically. On the back is trading and investing with common sense. All right, and book number 3 is also Ruben Villahermosa Chavez, Wyckoff 2.0, structures, volume profile, and order flow. He takes the actual Wyckoff method, right, the market price cycles, accumulation, reaccumulation, distribution, and redistribution, and he launches an indicator called the volume profile indicator over it. So it's like putting a set of training wheels over the market price cycles. You don't need it, but it's still some very great insight to read. It's more advanced. So you got beginner, intermediate, advanced. All right. So, but here's the deal. This right here is a bullish breaker structure. The market decided to come back and either come off of the accumulation or the reaccumulation, right? And bam, respected this area right here, respected that low, right? Boom, and then it went back what? Bullish, right? Because you can see right here the divergence, right? The change of character. Now here's the deal. All right, here's the absolute real deal. I can go over this with you on a candle by candle basis, on the monthly, on the weekly, daily, 4-hour, H4, H1, M30, M15, M5, M1 time frame. Okay, because it's the same thing. It makes sense. It just prints the higher time frame, the more patience you have to develop, and the slower it prints. Okay, that's just the real spirit. All right, so the market came right here. There's the accumulation. Boom, there's the change of character, right? So watch this. The market prints like this. This is how the market prints. Okay, this is an accumulation. The market goes up. This right here will be some type of bullish triangle, a reaccumulation. The market goes up again. The market reaches a high point, reaches a premium. It'll distribute, go down, and then right here, this will be a bearish triangle, redistribution, go down again. Then the market reaches a what? A low, a discount level again. And then it says what? Accumulate, reaccumulate. And the market breaks above this old distribution is called a what? It's called a bullish breaker structure. This would be a what? A bullish breaker structure above. Okay, so what causes the market to create a bullish breaker structure above? An accumulation, reaccumulation, breaks the old high, creates a new high, then the market will do what? Distribute, redistribute again, and then it'll do what? Accumulate, reaccumulate again. All right. Doesn't matter if it's a downtrend. Doesn't matter if it's sideways range consolidation. Doesn't matter if it's a downtrend. The market is going to print like this all the time. Okay. So even if I invert it, right? Distribution, redistribution, accumulation, reaccumulation, distribution, redistribution, right? Distribution, redistribution causes a bearish breaker structure below, creates a new low, then the market has to do what? Accumulate, reaccumulate again. Makes sense. It's just upside down. Okay, it's inverted. All right. So now that we got that out the way, let's go ahead and go over some chart work. But before we go over the chart work, anybody have any questions in the comments? Any questions, problems, or concerns? Let's see. No? Nobody? Okay, cool. Bet. Continue. So what happened was a strong, was very, very strong right here, is that in order for the market to pull back to here, right, this is a redistribution, right? You got to look at this right here from this standpoint. Okay, the market did what? This is a order block right here, right? This is a supply zone. Okay, so the market did what? Accumulated, reaccumulated, smacked the supply zone, it distributed, redistributed, and then boom, broke this low, right? Broke this structure, broke this low. The market then did what? Left this unmitigated, left this redistribution unmitigated. It accumulated, reaccumulated, smacked this supply zone right here. Smack that supply zone. Okay, and then it did what? Create a lower high. Then it did what? Distributed, redistributed, broke this low, created a new low. Now that this low has been broken, who needs to appear in the market? A lower low has been created. This low right here has been broken clearly, right? This is a bearish breaker structure. Bearish means going down, means sellers, right? This is a bearish breaker structure. Right here. So now that the market broke below, the bulls have to come in. Distribution, redistribution, breaker structure below, the bulls got to come in now. Now look, what happened in this particular area, the market accumulated right here. This particular order block right here was the opportunity for the bears to stop this move from going bullish, right? It did not happen. Market accumulated, reaccumulated, boom, it caused a change of character. This right here was the last what? High that led to the what? Break of this old low and creating a new low. So the market came back into the supply zone. It caused a what? A change of character. Now you have a change of character. Now here's the deal. A change of character does not determine the change of trend. I'm going to say it again. A change of character does not determine the change of trend. I'm going to tell you why. Here's the deal. It's a lot of times that the market would diverge, change character, and it won't come back to mitigate the demand zone that causes a change of character. Or you have a bearish divergence and change of character, and the market doesn't come back to mitigate the supply zone that causes a change of character. Perfect example on the 1 minute time frame where we just went over, right? Perfect example. On gold on the M1 time frame right here, created a divergence right here. Price diverged. Price created what? Bearish change of character. And the market did not come back to the supply zone that caused the change of character. The market did not come back up here and retest it as a lower high. So this is an unmitigated supply zone. See how, I'm going to show you. This is slanting upward. This is slanting lower. This midpoint right here. This is the last area of interest where the market did what? Accumulated, reaccumulated off this level. So then you're thinking, okay, cool. This is the last ditch effort opportunity for the buyers to create a higher low in order to go back up and create a higher high. So then you would do it like this, and you can see how the what? The bears, boom, went through that. Went through it. Came and tapped off of this reaccumulation, which was an area of interest where the buyers can come in at, which they did. But this higher low did not lead to a what? A break of structure up above and create a higher high. It kept doing what? Redistributing. So now this wasn't the area of interest for the buyers to come in. Now the next one is what? This one right here. This bullish divergence and bullish change of character right here. This right here. I can, this is so small, we're on M1 time frame, I can highlight this entire, the reaccumulation and the accumulation. I can highlight the accumulation and reaccumulation, and boom, do it like this. So now I can set me an alert when the market opens back up tomorrow at 4 p.m. Central Standard Time, decides to come hit it, mitigate it, be ready on the charts, ready to trigger on the finger, right? And wait on confirmations in order for this to go back what? TP1 will be that open redistribution right here. TP2 will be the distribution, and then TP3 will be beyond that. All right. So look on the M5. M5 looks like it's creating a divergence as well. You see how this is slanting upward. This low right here can get ran as well. And then guess what? If that low gets ran, that doesn't mean I'm going to enter for a sale, because once a low gets ran, the buyers need to come into the market. Okay. So then I will look for a point of interest right here that's unmitigated. This reaccumulation right here is an area of interest where the bears can come in at. This accumulation is unmitigated, imbalanced demand zone right here. This accumulation right here can get retested, and the market can go back bullish off of it and come back up here and reach a high. So this right here is also an area of interest on the M1 time frame until it gets blown through, it gets disrespected. I'm not looking for buy. This wasn't area of interest where the buyers wanted to come in at. It wasn't at a discounted enough price for the buyers to come in and push this back up. That's just the real deal. All right. So that area of interest, boom, make it M1 right here. All right. So back to the monthly. Okay, back to the month. So we have price diverging and changing character right here. So then the market created what? Distribution. Let's go on the weekly now so you can be able to see the divergence. This right here, from here to here, is slanting lower, and on the RSI slanting upward. Boom. Midpoint, bam, change the character area. Last area of interest where the what? The sellers distributed, redistributed, broke this old low, created this new low, boom. There's your buy. So now my little go-to setup is like this now. Once I see a low or high broken, I'm looking for this, what the market did right here when it broke this low. The market did this. Here we go. The market did this. Created a low, came up above, created that high. This right here, supply zone, did not lead to a break below that bullish wick and create a new low. It stopped and it went back up and did this. It started respecting demand zone from then on out because we knew the bulls were going to come in because we have a old low that's broken. What leads to a bearish breaker structure below? A distribution, redistribution leads to a bearish breaker structure below. So the bulls have to come in next to push this market back up. We just don't know how high. All right. So this right here gave you bullish confirmation. This could have been a buy, stop loss below the wicks, and you could have rallied this. Boom. All of this makes sense. Now here's the deal. You can see right here, you can see how price created a high, created a low, created a high, respect the demand zone, create a low. This led to what? Accumulation, reaccumulation, breaker structure, create a high. Here come the sellers. Now that you have a bullish breaker structure right here, and all of this is liquidity. When you see a breaker structure above or below, change of character, all of that is liquidity being taken. Okay, but you got to see how it reacts after it does it, because a lot of times, once you have a bullish breaker structure, the market continues to go up. It's not done grabbing more liquidity. Sometimes they have a bearish breaker structure below. It's not done grabbing more liquidity. You'll see the bulls have to come in when the low is broken. The bears have to come in when the high is broken. But you got to wait for the confirmation. You got to be patient for the confirmation. So this is liquidity. That's also known as a bullish breaker structure, right? So then the bears got to come in, distribute, redistribute, boom. The bulls did not decide to come in off of this reaccumulation. They decided not to come in off of this accumulation. They decided to do what? Create a new low. So guess what? This liquidity was taken. Bam! Right? This liquidity was taken. And so now, when the market creates a new low, okay, this is the last ditch effort. The buyers have to come in now. Remember, you have three areas of interest where the bulls or the bears can come in at. You got three areas of interest where the buyers or the sellers can come in at. Bulls come in at an old accumulation. Bulls come in at a reaccumulation, old reaccumulation. Or if the market decides to break a low, then they have to come in. And you just wait on confirmation. Vice versa. The bears come in at, the sellers come in at, when old distribution, old redistribution, or the market last ditch effort breaks a high, then the sellers have to come in. That's how you be able to keep yourself disciplined. Okay, so boom, this low was broken, right? So weekly liquidity below, boom, this low was broken. Now the bulls have to come in. They have to come in the market. Okay, so let's go look at that low. Let's go look at that low. Let's show you the confirmation. Look at it. So there's the confirmation. Look, you have the market create a low, create a high right here, came back, respected this demand zone, and then did what? Boom, shot up. This right here is an internal breaker structure. Boom, shot up. And what it do? Right here was an area of interest. Right here, this imbalance right here was a redistribution, was an area of interest where the sellers could have came in the market, but it didn't. So because they didn't come in right here, you call this a smart money trap. This will be a bearish SMT, smart money trap, because everybody thinks that the ill-informed, uninformed traders think that the sellers are going to come in right here. They thought that. But right here, you have a distribution, redistribution, right? That led to a new low. Here's the accumulation, boom, low, high, bam, respect to the higher low, breaker structure, right here, boom. This was an area of interest where the sellers could have came in at. The market tapped in, sold off, boom. That was your counter trend trade. You could have taken that as a counter trend trade on lower time frame, but boom, ran to the supply zone. Was an area of interest. This was an area of interest where the sellers could have came in at, but bam, it got ran. So now here's the deal. Now that this high got broken, right? This low ran this high, right? Now guess who have to come in? The sellers have to come in now that that high has been ran, right? So we're on a daily. So let's say daily liquidity above. This high has now been ran, so now the distribution has to come in. So let's go see the distribution on the lower time frame. Let's see if it let us go that far back. Not quite. So got to keep it on daily. I'll have to upgrade my trading package, which I'm not going to do. So you can see how, bam, okay, look. The sellers had to come into the market because this high was broken. Boom, liquidity was taken. Okay, cool. Distribution, redistribution, right back into what? This demand zone right here. That's unmitigated. This was the area of interest where the buyers could have came in the market. So you could have sold it to here, confirmation right here. Here's your buy entry, accumulation, reaccumulation, boom. Now this is a what? This is a bullish breaker structure, which means now the sellers have to come back in the market. So you never miss out on a trade opportunity. You never ever miss out on a trade opportunity. If you think of it that way, I'm just looking at what the market is saying. Oh, I missed out on the sale. No, you didn't. Okay, if you missed that drop or you missed that buy move, okay, catch the sale, catch the counter trend, or catch the next pro trend. That's all you do. Once you understand where the buyers and where the sellers can appear, you allow yourself to remain disciplined. Breaker structure. Bears came in, distribution, redistribution, boom, accumulation, reaccumulation. What they do? Break structure right here. Okay, now the structure has been broken high. What does the who have to come in the market now? The sellers. Here it is. Distribution, redistribution, boom. Area of interest where the buyers come in at. What happened? Low, high, respective demand zone, higher low, boom. Breaker structure right here. Now guess what? The buyers come back in the market. But guess what? The sellers stop it right here. Didn't break above this high because now this is a what? Old distribution. Now that you have an old distribution, the market wants to do what? Sell back down. Market wants to do what now? Sell back down. Daily supply zone. Cool. What did the market do? Distribute, redistribute. Bulls came back in right here. Accumulated, reaccumulated, came back to this supply zone. Distributed, redistributed, broke this low, right? And ultimately led to what? The break of this low. Now, speaking of the daily time frame, now that this low has been broken, right? This is now what? This low did not do its job. This higher low right here did not do its job. This higher low right here did not do its job. It was supposed to come off of this level and do what? If it's truly going bullish, the market's going bullish, a higher low's purpose is to do what? Break structure of an old high and create a new high. A primary purpose of a lower high in the market is to do what? Break structure below and create new lows. Okay? That's what's supposed to happen. Any questions, problems, or concerns? Because I don't know the person following me on here. If you're not a part of my Telegram group, feel free to download Telegram and add yourself to those chat channels, the Signal chat and the community chat. Okay? Or if you want to see a particular pair marked up, comment in the section. Put in the comment section. All right? So this higher low did not lead to what? A breaker structure of this old high and create a new high. Lower high, sellers came in, bam, create a new low. So now we know that we're officially bearish because now this is a what? A bearish breaker structure. This is a bearish breaker structure. Now that a low has been broken, right? Now that a low has been broken, we know that the buyers have to come back in the market. Doesn't matter if it's pro trend or counter trend. Here are the buyers. Here's the accumulation, right? Low, high, came back, respected demand zone, boom, breaker structure, went past this redistribution, came back up, and did what? Smacked this supply zone, right? Area of interest where the sellers would come in at, and then boom, did what? Sold off again. Okay, so now this led to what? Distribution, redistribution, came and tapped in and did not create a new low yet. This lower high did not do what? Create a new low yet. It respected this demand zone. The buyers came back in off of this level, right? Went back up. Here's the low. Here's the high. Respected demand zone. Higher low. Internal sub breaker structure. Came back to this supply zone right here, which is what? Their fair value gap. You got a fair value gap right in between here. So let me show you. You had a fair value gap, right? What is a fair value gap, you ask? Okay. Fair value gap. You have the bottom wick of this first bearish candlestick. The bottom wick of this first bearish candlestick is not mitigating, it's not touching the what? The top wick of this third red candlestick. They're not touching. You have a clean bearish red candlestick in between. And these two, the bottom wick of this first red candlestick and the top wick of this third red candlestick, they're not touching, they're not mitigating, which means that is a void of liquidity and there's a gap. There's a gap like this in the market. So right here, this is how you see it. You have this right here, and you have this right here. And you see how the market came back to fill that gap right here. That's the lower high in the market, right? This is a distribution, redistribution, breaker structure right here. Now the market is doing what? Ultimately, this is the breaker structure right here because this low is lower than this one. But yeah, it went to go ahead and do what? Break structure. And now it did what? Create a new low. Now the bulls got to come back in. Here are the bulls. Here's the what? Demand zone right here. But it blew past this and it went to this one. Okay? Because this is unmitigated, to be honest with you. This is unmitigated. All right? So this high did not lead to the mitigation of this. So if you slide this all the way over, you can see how it actually was mitigated by what? This right here. So here's your buy entry, right? Your buy entry. Low, high, smack the what? Redistribution. This supply zone did not lead to the market creating what? Break the structure below and creating a new low. Respect the demands on the bulls, respect that low, right? That's a low that's respected. Higher low, internal sub breaker structure, higher high. Now we're bullish. Now we're bullish internally. We're not bullish overall in the structure, we're bullish internally. So now we got a low, high, higher low, breaker structure, higher high, higher low, breaker structure, higher high, higher low, respect the demand zone. Boom, breaker structure, higher high. Now guess what? The market did what? Broke a high, become the sellers. Boom, distribution, redistribution, tapped into a demand zone. What did it do? Accumulate, reaccumulate, break the structure. Broke this structure right here. This is a what? Bullish breaker structure. Now that you have a bullish breaker structure, right? The market is at a high. It created a bullish breaker structure. So now we need to do what? Look for sales. And here's the unmitigated what? Supply zone. Why? We have another fair value gap on the daily. We have the bottom wick of this first red candlestick. You have a clean body, and then you have the what? Upper wick of this third red candlestick. The bottom wick of this first red candlestick and the upper wick of this third red candlestick, they're not touching, they're not mitigated. So they're literally sitting like this. That's what you call the fair value gap. Okay? So the market came back to hit it. Okay? You have this and you have this, right? And the market decided to do what? Penetrate a little bit deeper, which is okay. Okay? And then did what? Created a lower high and then sold off, did what? Distribution, redistribution, broke this low, create a new low, right? So now we need to, every time when the market is doing what it's currently doing, we need to LTTL, which I say look to the left. Look to the left to see where it's areas of interest in this scenario. See where the areas of interest where the buyers can come in at. Okay? See where the areas of interest where the buyers can come in at. That's what you need to see. Okay? Makes sense so far? Oh, you watching on TV, Aki? Okay, cool. Appreciate you, bro, for tapping in. All right. So yeah. So what I'm going to do now, I'm going to let's erase it. Let's start with the monthly again. All right. So now here we go. This is a monthly breaker structure. Okay. If anybody wants any other pairs marked up, just let me know. Put them in the comment section. I'll be able to see it. All right. We see the market created a bullish breaker structure right here. Okay. And the market see respected some type of internal accumulation, reaccumulation right here. Monthly demand. You had your redistribution right here. That's your redistribution. That's your bearish triangle. And here's the accumulation right here. So distribution, redistribution, accumulation. And the accumulation is on the weekly. You can see it better on the weekly. Divergence, bullish change here. All right. So I'm going to put that reaccumulation right here. Okay. So now, boom. What does it do? Accumulation, reaccumulation leads to a bullish breaker structure. Let's mark it up. The structure point. The structure point. Boom. So now, right here, same stuff, same exact stuff. You see how the market right here created. You see how the market rate is high, came back with respect to this demand zone. So then this accumulated, reaccumulated, created this high, right? You see the M in between here. So the market respected what? This demand zone right here. Market respected this demand zone right here. All right. Use this equal low as liquidity. Took it. Distribution, redistribution. Took this low, right? Once this low was taken, right? This was the last low in the market that pushed up, right? Once this low was taken, what happened? If a low is taken, you know the bulls have to appear. So equal low liquidity low was taken, and you tapped into a what monthly demand zone. That's powerful. Accumulation has to come through. Bulls got to come through. Bulls got to come through. Right? Makes sense. Any questions, problems, or concerns before I continue? Any other pairs anybody want to see marked up? Okay, cool. So we're gonna continue with gold. All right. Continue with gold. Anybody has any questions? Oh, all right, cool, bet. So now, as far as the monthly, this will be a low, this will be a high, this will be a low, it's the accumulation low. Here's the breaker structure. Right here. Okay, so now you see what? Accumulation, reaccumulation, monthly breaker structure, create a high, right? So now we can go to the weekly. Cool, bet. On the weekly, what do we have? You see how the market respected what? This particular area, right? So we zone it off. Weekly demand zone. Okay. It broke this structure, create a new high, right? Let's see. All right. I don't want to confuse you all, but I'll put it right here. Just for recording purposes. This will be the weekly break structure. Market pink. All right, pushed up. Boom. So now we focus on this right here. Let's go to the daily. So what we focused on. So right now, you can see how this right here is unmitigated. So maybe an area of interest when the market comes back down, if the bulls can reappear in, participating. Okay, so we got to keep this area in mind. We see it's unmitigated on daily. We see this thing as an entire reaccumulation. Clearly see that reaccumulation right here. Right. So now we need to point forward towards the 4 hour. Right, H4. We see that the market broke structure right here. You see a regular structure where the market rebalanced that. It rebalanced that right here. So the market rebalanced right here. Right. Let's see flag divergence. All right. Put this as an H4 breaker structure. Right. And the reason I'm marking it on every time frame because just because it's the same pair, every time frame acts as its own market. Every time frame acts as its own market. So you can have a trend with inside of a trend, with inside of a trend, with inside of a trend. Just because overall the monthly is bullish doesn't mean I can't take it for sales on the lower time frame. I don't have to wait that long. It's the same stuff. All right. So market sold off right here. It didn't create a new low. Respected this low. Divergence. Change of character. Right here. Market came up. Respected this demand zone. Right here. Diverged. Changed character. Went up. Okay, so what I see is market sold from there, but it rebalanced. I can see it rebalance. I could put it on H1. I'll put it on H1. So the market rebalanced right here in this particular area. Let's see. We can go ahead and do it like this. Market rebalanced in this particular area. 1 hour demand. So you know the market did what? Accumulated, reaccumulated, broke this structure, right? And ultimately went there and did what? Broke the structure. So we're gonna put it over here across this like this. Since they both had that breaker structure right here, basically at the same price. Okay. So then you have what? There's been a reaccumulation. This stuff is absolutely readable. So there's been a reaccumulation. So you know you got a what? Accumulation, reaccumulation, bullish breaker structure. You know you're looking for a distribution up here because you already got the reaccumulation print. Make sense? That makes sense? You already know you're looking for a distribution when it's all said and done because you have your reaccumulation already right here front. So here's the deal. Here's the real spiel. You see this imbalance right here. This is an area of interest where the buyers could come in at. You see it's imbalanced. Okay? You can see how this is the last area of interest where price rebalanced itself before it did what? Accumulated, reaccumulated, broke this structure, and created those highs. That makes sense. So we're going to mark this probably on the M15. I'm going to leave the zone on the on the H1, but I'm gonna mark the structure as far as like the breaker structure and everything, M15. Okay. Now what we can do is we can look in between this. Okay. So you can see this stuff is absolutely readable. You can see how the market did what? Accumulated, reaccumulated, broke structure, created a new high. You can see this absolutely. Since this is a bullish breaker structure, you know this has to be a what? That has to be a what? A distribution. Cooking. Okay? So you can see this slanting upward like this. In the RSI, you're going to see some type of bearish divergence or attempting to diverge. Watch. Okay. See? And this possibly being the change of character area. But you have to take into consideration that the buyers may want to do what? Push up off of this, not want to change character, and push back and take out these highs. Absolutely readable. So here's the deal. This is a bit more advanced. So I've been studying the events, the actual events within the Wyckoff method for like a little over 2 years now. All right. So the actual events within the Wyckoff method, I can see it. I can see it just from this area, knowing the events of a distribution schematic. Okay. So let me go down to the M5 and show you how I can see it. This is not definite. I'm just labeling as I see it. This would be a, turn this orange. This would be a preliminary supply. This would be a preliminary supply. This right here will be the buying climax. This right here will be the automatic reaction. This will be the secondary test. This will be the minor sign of weakness. And this right here will be the up thrust. Okay. Now, what I want to show you is how it's absolutely damn near identical. Okay. So what I want to do is I want to pull up the diagram to show you how it's almost identical. When you understand where the bears and bulls can appear at and should appear at, you create this discipline. You're like, okay, I ain't missed a trade. Like I never missed a trade. What I mean behind me never missing a trade, if a sell or a buy has happened, okay, cool. I can get in for a sell or buy based off of the counter trend trade or pro trend trade because you know where the buyers and you know where the sellers can appear at. That's what I'm saying. All right. So I have this this diagram, this download of the Wyckoff market price cycles. Okay, and it doesn't show a reaccumulation and it doesn't show a redistribution. Okay, but it shows the two different types of distributions and accumulations. Okay, it shows the two different types of distributions and accumulations, type 1 and type 2. Okay, it does show that. All right, so what I'm gonna do, I'm gonna pull it up, and what I'm gonna do is I'm gonna share it. I'm gonna share it. Hold up. So I'm gonna share it. Let's see. Stop sharing. Share screen. Where we at? Here we go. Window. I bet. Cool. Now y'all can see it. Now everyone can see it. All right. So this right here is on the left hand side, you got a type 1, type 2 accumulation. On the right hand side, you got a type 1, type 2 distribution. Okay. And so here's the deal. You can see within the distribution, right? You see within distribution how you have this PSY called preliminary supply, push down, the market shoots up, buying climax, automatic reaction, secondary test, sign of weakness. You can see the W from the buying climax to the automatic reaction, secondary test minus sign of weakness, and the market does what? Accumulate, reaccumulate, shoot up again, cause a bullish breaker structure, create an upthrust. Okay? That makes sense? So now this is where the market starts to diverge. It starts to diverge from the BC, which is the buying climax, to the upthrust. Just imagine a trend line going from the BC to the upthrust. Okay, that's where the divergence occurs. That's where it attempts to begin. Just be patient and let the market print. It'll come to you. It'll absolutely come to you. Same thing right here in the type 1, type 2 accumulation. The preliminary support, the selling climax, automatic rally, secondary test. This right here is called the upthrust action. That's missing and does not print it on here because I got it off the web. But the upthrust action leads to the secondary test in phase B. You will start seeing the divergence between the selling climax and the spring and the test. So the selling climax, imagine a bottom trend line, slanting lower between the selling climax, secondary test in phase B, and the spring. And then you have the RSI shooting upward. Okay? That's the real spiel. Whatever. I can go over this stuff all day long, all day, every day. Right? So let's go back to the charts. Boom. All right. So here's the deal. Now that we know on the M1 time frame, we know that this is an open supply zone. Here's the deal. The buyers had an opportunity because this market did what? This lower high did not lead to a what? This lower high tapped to a supply zone and it did not lead to a new low. Respected demand zone, accumulation, reaccumulation, boom. Here's an internal breaker structure, right? The market went on to break this structure, and now it has to do what? Distribute, has to sell. Here's a sell. Boom. Now here's the deal. The market has changed character. Okay. The market now has not only changed character, right? When it attempted to come back to hit the supply zone that caused a change of character, it stopped. So accumulated, reaccumulated, stopped right here on this what? Redistribution, right? Stopped right on this redistribution and sold off again and went to go do what? Break low. Break a new low. So now that a low has been broken, you are now looking for the what? Buyers to reappear in the market based off of confirmation, not assumption. Okay, this was an area of interest right here for those buyers to come in at. It pushed up off of it, but it didn't have enough oomph to break above this high. Boom, broke lower. So now we got a high, right? We have a high, low, lower high, and then guess what? This right here, accumulation, reaccumulation right in between here on the M5. You can zone this out just like this, knowing that this is an area of interest that the buyers have a chance to come back in this market. Why? Because internally you have a low, high, higher low, boom, break a structure right here. So you have the buyers have an opportunity to do what? Reclaim the throne right here in this area. If it doesn't, what is the market going to continue to do? Bam, sell off. And guess what? You got an LTTL, look to the left, and look for the next buy. Because on the 15-minute time frame, this is absolutely creating a divergence, and this area can be the change of character. Okay, so now, but we got to look at it first instance that, okay, cool, this is an area of interest where the buyers can rejoin the market at, and possibly the market can do what? Buy from here with confirmation, nice tight stop loss, and we can do what? Redistribution would be what? TP1, right above this high would be TP2, and then we'll do what? Continue to go up if it wants to. Doesn't matter how the market prints, what it chooses to print, which way it chooses to print. We understand why it's printing the way it is. It never throws us for a loop ever again. Just following. Okay, so right here, you can see right in between here, the distribution, redistribution that leads to the low. Now you know what? The bulls need to come in the market. The bulls need to come in the market. Make sense? Any questions, problems, or concerns? I think I'm gonna mark up one more pair. I'm gonna mark up one more pair. You know what? I can't. I really gotta go. I got something I gotta be on. I appreciate each and every one of you for taking time out of your busy schedule to listen to what I have to say. It's always greatly appreciated. I'll never ever take it for granted. Have a safe, blessed, productive rest of your Super Saturday and your weekend. Know that I love you. And as I always like to say, God created us on purpose to fulfill a purpose. Okay? What purpose are you willing to fulfill? And don't be one of many, be the one. All right? Take advantage of the free Telegram chats, and we're going to have a successful, productive, and profitable week ahead. Y'all take care. Appreciate y'all for tapping in.